Good evening, ladies and gentlemen. Thank you for being here. We really appreciate it. Before we get started, and we're going to be talking about a lot of stuff, please take a moment, read the disclaimer. We are not financial advisors. We have no idea what your financial situation is. Do not make any moves based on what we talk about. Everything we say is our own opinions. This is for educational and entertainment purposes only. With that being said, do we dare start down the hole that everybody knows we're going to eventually go down today, or you want to go somewhere else?
Let's just avoid it for as long as we can and start with anything else.
Anything else?
Anything else?
Silver. Let's start with silver.
Let's start with silver. All right. Sure.
What in the world? Do you want to pull up a chart, or I can pull up a chart too?
If you want to pull up a chart, you're more than welcome to, and I'll share the screen.
Yeah, let me do that real quick. This is absolutely crazy. This isn't the best chart, but it's who I sometimes use to see.
You could pull up a Seeking Alpha chart and have Tevis make fun of you the way he's making fun of me last night.
Yeah, this is probably not showing up well enough. Yeah, let me find a better one.
It actually recovered quite a bit.
Yeah, it's still up. It's been up 9 months now with the close today, but it's been brutalized. Why can I not find a decent chart?
I got it.
Okay, I'll let you do it.
So this is let's go on the weekly view. This is what silver looks like for the last decade. And if we zoom in, this massive candlestick here is today. So silver 28% down today. This is what the 1 minute chart for silver looks like today. It went as low as $69 before rebounding up to $76 and ending the day at $75. It is the single biggest drawdown in silver since 1921. So if any of you watching are over 105 years old, you've seen this maybe once before. Probably not old enough to see it, but yeah, for the rest of you, this is a once in a lifetime.
So what meme stock was that again?
Yeah, SLV, the meme stock.
Yeah, so this is absolutely wild. Now, my take is like all this really tells us is that it rose up too far too fast. It's a blow off the top moment. By every definition, we saw it, multiple times go up double digits, which precious metals don't really do that, with rare exceptions. So, but on a consistent basis and being up over 9 months, it just got way, way, way overheated, and a lot of speculators came in, a lot of traders as well. There's maybe a couple other things too, but I really think that's the biggest thing. I'm not reading anything more in on that. But what about for you guys? Is there any takeaways that you have from this beyond a tip like you would have with any other asset that just rises so much, goes too far too fast, and then it has to come down? Is there anything structural in the economy or macro or anything that's causing this?
This is my fear is that everything's so intertwined and there's so much leverage in the markets that these types of moves were historically reserved for altcoins. And then these types of moves happened in mainstream crypto, like Ethereum and Bitcoin. And now these types of moves are happening in freaking metals, dude. Let alone small caps, meme coins, the GameStops of the world. Now they're just happening in silver. And so I think this is just a sign of a symptomatic kind of misalignment in the markets with regards to algos and liquidity. What happened for silver to fall? Oh, there was a nomination of an overly hawkish Fed chair. Really? Really, guys? 33%? World wars and all kinds of if you look back on a 30% drawdown in silver in a single day, once in over 100-year event, and you have no context, you would think shit hit the fan big time. Somebody bombed somebody, or we got hit with some asteroid or something. No. It was just a Fed chair was, not sworn in, just a front runner, let's say, nominated. It's just insane.
Yeah. So, Steve, is there anything else going on beyond what Tevin mentioned, or any reads or takeaways from something like dropping this far, this fast?
So what I would say is that I've been saying silver is going to do this. I just didn't know when, because once again, you can't have something go parabolically up like that. And Roy, you know this from buying silver. When there's so much silver on the sidelines, and I'm sure I've said this to both of you. I know I said it to Chris and Amit. There's so much silver on the sidelines that people have been buying for years and years. At some point, people are cashing in. And I'm not talking about people buying a couple of freaking silver dollars here. People have been buying monster boxes. People have been buying kilo bars. It's not just people, it's corporations, it's governments. At some point, the silver stackers that were buying at 10, 15, and $20 an ounce, it gets to 114. At some point, you take money off the table. I mean, this was bound to happen. Is it going to rebound? I have no idea. But JP Morgan did get sued a couple of years, and they had to pay a fine for manipulation of silver, I believe.
Yes.
Now, I don't want to speak out of term. We can Google it, but that is what I recall happening. Whether it was true or false, I believe they did pay a fine for that. I think it was 9 figures, I believe, if I'm not mistaken. People have been warning about a structural demand issue in silver, and it looks like it may have just happened. Now, we're not going to know for another 6 months or 12 months if that's true, but I don't believe there's been any new silver mines opened, and silver is now just a byproduct of mining gold and copper. So if there really is a structural demand with the combination of the amount of computer parts we need for data centers, GPUs, electric cars, robots, everything else, yeah, it makes sense that silver went up, but not on if you look at a 10-year chart of silver, it going parabolic in the past 2 months, kind of crazy. So yeah, this was obviously going to happen. The question is, does it rebound the next couple of weeks?
Yeah, I mean, like I wouldn't want to bet either direction. I have some physical silver. That's all, but bought it like when it's $20 an ounce. So and I'm not planning to sell it, so it like doesn't matter. I already sold like some in full disclosure, like in the 30s and then some in the 40s. So, but that was stuff that I bought like back in 2013. So it's been a while. Yeah.
There's people now that are saying that, oh, well, this is a great buying opportunity, or people chasing. And remember, earlier this year, we had lines around the block for people buying gold, if you guys will remember that, when gold hit a new all-time high back in the fall. And I think as crazy as the biggest single-day drop in 100 years is, I think equally as crazy is prices never before seen in silver since 2 weeks ago. Like, that just speaks to the inherent volatility up and down that we're seeing right now in silver and in copper and in platinum and gold and pretty much every metal out there.
Yeah. Yeah. And some are saying also, this might have to do with Federal Reserve. I think that there's a lot of different factors, not just one, obviously. Now, one ramification of this, because there's been some concerns, silver is used, I think 70% of the silver that's mined typically goes to industrial applications. And with the AI arms race, like that's accelerating. So this has been a concern. It's been brought up on a couple of earnings calls already. It's still expensive, especially relative to or where it was. But I think it takes some of the heat off of people that are like, hey, we got to buy and use this stuff. What do we do? So healthy thing. I mean, it's not like healthy to see a 30% drop, but it's a normal thing, I should say. A normal market thing. It's not saying really anything beyond that. But we could honestly see it bounce back up the other way. So I know a few of our friends and creators on X had shorted silver. I hope that they took profits here. Can always go down more, but when it goes down 30-something% in a single day, it's okay to pull the trigger. All right, beyond silver, I know that probably not many of us are actually invested in that. We had a lot of large cap earnings that went this week. Now, out of that, beyond the one company that we're going to talk about here in just a little bit, were there any standouts positively or negative for you, or any surprises as well, and any reads as far as what's happening with the themes of, like we talked about last week, that software is dead, supposedly, or that the AI arms race or AI is just a bubble.
Surprises that Microsoft went down on a fabulous quarter. Ridiculous. Meta.
Speaking of trading like a shit coin, Microsoft.
Yeah. Let's start there. So the only you can always, whenever a stock is falling, typically what happens is people look for a reason and search for a reason. Sometimes those reasons aren't there. There were some things there, and I think that the biggest number that concerned people was that basically, I think it was 42% of their future revenue from their data centers in Azure was going to be from OpenAI. So that's the first time that they broke out that number. Analysts asked a couple of follow-up questions, and then I saw a lot of people comment on that just because OpenAI has stumbled. It's had some weakness as well. Is this a structural concern for Microsoft? Overreaction? Is it just caught up in the theme of software is dead as well? How do you think that this ends up?
I know Steve and I talked about this a little bit yesterday. I'll just jump in, and then Steve, I'll let you take it from there. Look, I think it's a re-rating based on the risk that's carried forward with OpenAI, because OpenAI, I think, along with the entire AI trade, is very much an improve it type of phase. And Microsoft was essentially this company that was well diversified in terms of their revenue and their concentration. And now we're seeing from this quarter that, hey, maybe there's a little bit of concentration risk that's dependent on OpenAI. And OpenAI is at the heart of, this trade that we have to validate the demand for, that we have to validate the profitability for. There's a lot of outstanding questions. And so Microsoft will obviously trade down on that uncertainty.
We have a surprise for everybody. So a surprise is incoming in a minute. But anyway, this was an incredible quarter for Microsoft. It is too cheap. And they were focused on two numbers. One, the RPO that was obviously, what was the number? 45% OpenAI, and people are not fond of OpenAI compared to what Anthropic put out. And then also Azure missed with 37.5% growth. I mean, that's such a ridiculous thing. So good. Let Microsoft go down. Let it keep going down. I'll keep buying it. Good. Let it go down. It's going to be a bigger company, most likely, if I had a bet in a year from now than it is today. So let it go down. I know that my forced buying in my retirement account today is very happy. I can tell you that right now.
So along with Microsoft, you mentioned Meta. What did you guys think of Meta? Any reads there? It went up. It was one of the exceptions. A lot of companies had really excellent earnings, and they sold off anyway. Meta was the exception, of course, when they reported.
Yeah, I got two words to say about Meta earnings. Everybody knows what they are. It's called no shit. Told everybody this was going to happen. Told everybody last quarter that you're ridiculous if you think that this is anything meaningful. The check that they wrote was insignificant in the grand scheme of things. They blew earnings out of the water, and they're likely to do $31 to $33 of EPS in 26. And we have a surprise. There's a party going on at a mid.
Look at what we're doing. Watching the Goonies.
Hey, guys.
Hey, what's up, everyone? Hold on. There we go. Just turn around. Oh, we got to turn it around.
We're watching a stream of them watching us.
Yes.
Oh, Sammy.
Hey,
What's going on?
This guy. Wait, it's the other way around. There's a minute delay. That's what it is. I can't even tell. Stop. I've never streamed 1 minute delay. It takes a while. Yeah. Okay, let's talk about Disney. All right, guys. We're just saying hi. We'll talk to you later. We'll see you guys tomorrow. Excited.
See you guys.
Bye. Hold on. Bye.
Later, doggy.
There you go.
See you, everybody. So many celebrities in one room.
Yeah, man. Yeah, a couple of people I have not met yet face to face, but most of those people, yeah, they're awesome. So
Tomorrow and Sunday are going to be fun. That's all I can say.
Yeah, I wish I could make it.
We wish you can make it, Roy. We understand that you have
It's
things that you can
having a family and having a full-time job. It's like, well,
I get it.
can't always.
get
We do
it.
what we can, right, Tevis?
But when it comes to Meta, 115 billion in cash from operations, this is one of the best companies ever. And the one-time non-cash impairment in Q3, where their CFO flat out came out and said this is a one-time charge. This is not going to matter in Q4 or in 2026 or going forward. And the new tax laws are actually going to be beneficial. And the street disregarded it only for them to blow earnings out of the water. And I got to tell you, they are going to do big things this year. I think that this is a company that goes 850 to 1,000, and then Zuck splits the stock 10 for 1. That's my prediction for this year.
Yeah, I can't invest in it, but yeah, I agree with you on your assessment of Meta. It's very strong. It got too cheap. I think it still is cheap. Tevis, did you have any thoughts from Meta beyond what Steve mentioned? Anything stand out to you regarding the emerging narratives that are happening this year? CapEx.
I mean, I didn't listen to a single word that Steve said, but I'll repeat what I said yesterday. Look, I think Meta traded down on CapEx in a quarter from now, and they traded up on the same reason a quarter later. And I think Meta has an entire ecosystem, right? I think Meta's CapEx is different than other companies' CapEx with regards to AI, because Meta can actually translate that CapEx into revenue. And it's interesting. I think we'll have to keep monitoring it. I'm glad that my covered calls didn't get blown out of the water completely, although they're still on life support right now. So we're gonna see, man. I don't have any complaints around Meta right now, only that I didn't buy more.
Yeah, congrats. So yeah, I think that you hit the nail on the head. That's the difference between Microsoft and Meta, is that Meta did a good job establishing the ROI, like why they're doing this, that there is going to be a return, that there's immense value. Zuck did a great job on that too. And honestly, the market didn't see the same thing from Microsoft, either from the CEO or CFO. And I think that might be explain at least part of the difference of why it sold off. Now, beyond those two, of course, Apple went. Now, I don't care anything about Apple, but you do get some reads on the consumer, and you do get some reads on the spending there as well. Did anything stand out to you guys for Apple at all?
I mean, they set the tone with the offense, that's for sure.
It was a good quarter for them. Sold out.
It was a good quarter for them.
Yeah.
Services is going to have a run rate of 125 bill this year. iPhone's in the super cycle. Dare I say that Apple is starting to look like the Apple of old?
I don't think so, but
yeah,
they are making some better moves than they had a few years ago. I think them partnering with Gemini, with Google rather, for Gemini. They've punted on the AI race, but that'll work for them just because of the way that their ecosystem is structured. It's a lot better than whatever Apple Intelligence is supposed to be. So, yeah.
Yeah. How many socks did they sell this quarter, Steve? Is that why we got a blowout quarter?
You know what? I said I was going to stop making fun of them selling socks because of how good the quarter was.
Yeah, well, let's move on to the big topic.
Yeah, we've prolonged it enough.
Can we talk Tesla first, or do we want to save Tesla?
No. Let's get into the meat of it. Tesla.
Okay, we'll save Tesla then. ASML as well. We might talk about, but yeah.
What did I say last night? I said, don't be surprised if this sells the hell off.
Yeah, we're referring to Deckers, right? That's the one that everyone's waiting on.
Deckers, man. Deckers.
Uggs?
What did you think of the quarter?
Wait, Uggs reported today?
Tavis, what did you think of the quarter? You know what we're talking about. We're going to give the people what they want. We're going to stop screwing around. SOFI.
Yeah, man, this is the SOFI therapy session right now. I made this little meme, channeling my inner Matt. Steve, you'll enjoy this one.
Oh, show it. Let's go.
Throw it up on screen. This is the vibe for SOFI.
Love it.
Yeah, look how they massacred this poor stock. It's down over the last 3 months, down today. It's just not a great time to be a SOFI investor. But hey, look, this is what we're used to. I guess we're used to this pain.
So Roy, why don't you go? Because I have a theory, but I want to save it for last to see if either of you say why.
Like beyond just what's happening in the macro, possibly the Fed nominee, he has a reputation of being a little bit more hawkish than was expected. He's not officially confirmed, but I don't know that that'll be a problem or issue. And that, rate cuts or the lack thereof does have an impact on SoFi. So maybe that, you can squint and be like, well, tech platform was weak, especially when you exclude that 33 million one-time item from Chime. You could look for a couple other things too. I actually have a video coming out tomorrow morning that goes into like some of the stupidest bear arguments. Like I literally heard, and some people posted charts showing this. So it's like, where are they getting this? That apparently revenue was down quarter over quarter. Like, no, though it's an all-time high. Apparently product adoption was low. It's like, no, it continues to increase. Apparently members were flat quarter over quarter. No, they gained 1 million new members. Like it just thing after thing. And I'm like, and some showed charts like that. And I'm like, what is going on? Like, I understand like if people don't like tangible book value and the valuation of SoFi for some reason, fair value lending, and Lending Club was caught up in that, by the way, this week earlier. Fine. But like to come out and just make up your own facts of why it's going down. Now, that is human nature. When you see something fall down, you just assume, oh, it must have been really bad. But I just don't think that this was deserved at all. I'm a happy owner of more SoFi shares. Increased my holdings by about 20%, actually. So, yeah.
When did you do that?
Well, I wrote cash secured puts on Thursday for 24, and I'm like, hey, even if it falls, I'm happy owning at that price. And it fell, So I would have been better off if I had waited, of course, and not written puts. I think my actual fill price, putting in against a premium against that, was 23.29. So, I mean, I don't mind owning more SoFi at that price, given what I expect that they'll do this year and their guidance. Honestly, like their guidance over the 3 years, man, and it's probably still sandbagged. That's the thing.
So before I tell you why I think it's selling off, have they ever done a rule of 40 slide before? Or is this the first time?
Yeah, last quarter was the first one.
Last quarter was the first one? Okay. So rule of 40 looks good. Not that I really care about rule of 40 a lot. I think it's the EPS guide that made it sell off. I think 60 cents is light. I think that they are truly valuing this as a bank, not a technology company. They're saying, we don't care about the 30% year-over-year growth that you're projecting in 26. You're coming out with 60 cents, too high of a PE for a bank. This is getting lumped into financials now, and this is going to be hard comps. And there's no other explanation. This was an incredible quarter. If this was not a financial company, I think this would have flew today. The fact that it's a financial company, you had everything you could have wanted in this quarter, but 60-cent EPS for 2026 gives an incredibly rich valuation for a bank. So
yeah, the thing is, how many banks do you know that are growing at 40% plus?
Doesn't matter. It doesn't matter.
It does matter.
The market.
It may not matter to some people.
The market is telling you it doesn't matter.
It doesn't.
But to you, the market is telling you it doesn't.
Well, it's trading. It's trading at where it's at or where it's been in the past, because revenue actually does matter substantially. When you have a bank that's trading at like a 2.5 or 3 tangible book value versus SoFi's 3 point something, those banks might be growing maybe 10%. Now, there's exceptions. SoFi is growing 4 times as fast. I mean, you got to give a premium for growth. In the tangible book value argument, like I don't want to rehash it. It's the dumbest thing. I don't think that banks, even in general, like even Warren Buffett sees it this way, should be valued based on a tangible book. Like it's one of many measures you can look at. If that floats your boat, that's fine. And it's okay to like compare like sector versus sector, but there's a lot more that's going on at SoFi that tangible book value misses. It's still important. It's relevant, but yeah.
I don't know, why we're trying to attribute some rationale on a day when everything dropped. Like the indices, the NASDAQ was down over 1%. Like mega caps got hit, everything got hit. Like I think it's even as simple as, okay, well, SoFi trades in a basket, the entire basket is down, SoFi's down. Like
everything didn't get hit. Tesla went up.
Okay.
Well,
Sure.
We'll
What
talk about
else?
that.
Like Tesla, SanDisk, and then everything else is down.
Robinhood was up a little bit.
Qualcomm went up.
VG, woohoo! Yeah,
And
a lot of
nobody's
things were
getting
down.
looped in as a bank. And
So like,
unfortunately, that's what the market is telling us. This was an incredible quarter. There's nothing in this quarter that you can pick out and complain about. This was another drop the mic moment.
Tech platform being down 20% plus.
Okay,
23%.
you're right. Tech platform. Sure.
yeah, that was
Sure. But does anybody really care about the tech platform anymore?
not really.
Exactly.
Not really.
So once again, nothing that you can really complain about because everybody's written off the tech platform anyway. The problem is that because we've written off the tech platform and because we're not going to have any new news on the tech platform until next quarter with the RFPs, then you have to look at this as a financial institution. And financial institutions just don't command these multiples. And that's what they're getting lumped in as.
Well, why does Nubank command the multiple it has?
I mean, they're not even a freaking American company. Who cares?
So the multiple should be lower on Nubank.
LATAM. Do I care about LATAM? No.
But the market looks at it and does care.
care
And I
about
care
LATAM?
because I own it.
No.
So,
No.
Steve, you're wrong on the tangible book thing.
I didn't say anything about tangible book.
Well, I don't like. I don't
What did
think
I
that
say
the
about tangible book?
valuation and it just being just a bank like this is all old stuff.
What did I say about tangible book?
It doesn't explain a 10% drop in one day, especially like looking at the tangible book value. It's like, was there any like negative surprise?
What did I say about tangible book value?
You mentioned it.
I didn't mention tangible book
it's
value.
being valued.
I said it's valued as a bank. I didn't say tangible book value once.
Look,
That's how
I think
things are valued.
where I'll meet you guys in the middle is I think guidance was definitely conservative. Let's put it that way.
Very.
And the 60 cents EPS, I think they could have gone higher. Interestingly, it was still 60 cents EPS in spite of a macroeconomic assumption of 2 rate cuts, which is pretty in line with consensus. And that was surprising to me, right? They weren't sandbagging the macro assumptions, but they were sandbagging the EPS. And yeah, we'll see. Loan platform business continues to be the heart of the growth engine for SoFi. It is just so freaking impressive.
And how about they're able to sell loans at 106%?
Yeah, I want to pull that slide up actually.
I mean,
that was my favorite slide here easily.
The fact that everybody made such a big deal about can they sell the loans? Well, they've showed you in the past they can sell the loans, and they just said, well, 106%. What else do you want us to do?
Yeah. And
now, yeah, I mean, like there's a few things we could cherry pick on that too, but like okay, I got this thrown up. We'll share this. And if you can throw that up, Steve.
Yep.
Yeah, here's
I'm
a slide
trying
that
to
we're
drive
talking
well so Tevis doesn't complain.
So, yeah, this is pretty remarkable that it's also increasing as well. There's no issues like commoditization or what have you. Now, the other argument that I have seen some bears say, and it is kind of a fair take, although Noto tried, I think, to get in front of this narrative as well, is that SoFi is through the loan platform business and also through their own originations reaching such a large amount of personal loan market that at some point they might look at running out of demand. Now that point doesn't look anytime near. Noto kind of got ahead of that too by relating to like, hey, personal loans are fueled by credit card refinance opportunities. That is a huge, huge market. If you are very myopic, you're just focused on this. Plus, there's other legs of the loan platform business they'll spin off. But yeah, this is just frankly incredible. And one of the reasons why I think SoFi should carry a premium, that this is essentially no risk. There is one small exception to this: revenue that they get from the loan platform business. If the loans default, that's they're selling these loans. They make their money right away immediately. So, yeah. Are you buying the dip, either of you?
And then consider this, just before we go into buying the dip, consider this, the $1 trillion total addressable market that Noto was talking about, because loan platform business right now, they're doing it on personal loans, within their credit box. And as they expand their credit box sort of vertically, and as they expand into complementary offerings and student loans, home loans, like horizontally, you have this total addressable market that's going to keep expanding in a decreasing rate environment. So they're going to have so much optionality with regards to loan platform business to accelerate it even further, which is staggering to even believe because it's going up multiples.
So I bought the dip through cash secured puts. Did you guys do anything with your SOFI position, or are you doing anything?
No, I bought two. I bought more of one thing today, and I started a new position today. I'm not buying SoFi. I also have a large position in SoFi, so I don't need more. If it goes down to say 16 or 15, I'll buy more. But I'm not interested in $22 SoFi right now.
All right.
I mean, it's hard when you have a cost basis under $10.
Yeah. No, it's my second largest position, and I get, when you have a certain size, like this is SoFi that I put in the swing bucket just because it is overweight for me.
Yeah, I didn't do any SoFi trades. My only trade today was I closed out my NVIDIA cash secured puts at about 55 or 60% profit. So I closed them early, which I don't love doing. But I used that room to write Nebius cash secured puts for March. Lots of premium there. I collected like $15 a premium.
Do you mind sharing the strike?
Yeah, I did $90 strike price cash secured puts when the stock was at $85.26, and I collected $14.50 of premium. So just under $6,000. So we'll see where it goes. But for March 20th.
Yeah.
I just update. I've been at work all day, and I got home and I didn't do anything. So I just updated one of the SoFi slides that I track. The loan platform is so interesting for 26. I just put the Q4 numbers in. It is at all-time highs on an aggregate. Personal loans is plateauing a little bit, and you're not even getting a breakout in student or home. When rates come down another half a point or 3/4 of a point, I'm willing to wager that we see a lot of action in home loans and also student loan originations. And I think personal loans will continue to go up gradually. So this is super exciting for 26. I don't think enough people are paying attention to this.
Yeah, we saw a lot of originations across the board. Let me throw up the slide for you, Steve. But from an originations perspective, all three segments were very healthy.
10.49 billion.
Share this. All three were very healthy. Here we go. So you can see the light blue is Q4, and then they also broke out loan platform business, and this on a year-on-year basis for loan platform business originations here. But yeah, very, very healthy. Like student loans better than any past Q4 over the past 4 years. Home loans double any past Q4 of the last 4 years, and then personal loans also at some record highs.
So those are. Let me pull on the quarterly basis because those are the annual ones. But yeah, the originations were strong. I thought lending for the personal loans would be a little bit stronger, but yeah, this is strong no matter how you slice it. All right, here we go. If you can throw this up, Steve, just so we can take a look. So yeah, here's the.
I swear to God, guys in fiscal AI. I'm never getting it now, just on principle because all of you use it.
I don't use it.
It's a really good tool. So here is the personal loan volume, still very high. I actually thought that they would have lended a little bit higher. Now, see, Q4 is usually actually lighter as far as seasonality on personal loans. So maybe that's a factor as well. There was some uncertainty in the macro too. But I thought with that known capital raise event that they would actually expand this more aggressively, which is why I thought that the revenue would be a little bit higher. Now, lending origination as far as student loans, that is up actually immensely. And of course, home loans actually outperformed where I thought that they would be too. So is this a trend that we see going forward? Aggressive lending. Yeah, I think that's why that they did the capital raise ultimately. Chris LaPointe talked about it like literally the day before, kind of showed their hand. So I think that we'll see this. We see where the guidance is as well, and they broke that out a little bit for the individual segments too. So yeah, the EPS targets. How sandbagged do you guys think those are for this year?
Very.
Like the typical sandbagging, or a little bit less, a little bit more?
If he's saying 60 cents, I'd be willing to wager they're going to come in at 70 to 80 cents, somewhere in that range.
Yeah.
Probably higher, because that's 60 cents without any like acquisitions or anything
Yep.
being accretive. But they can raise more money. Like, so for example, this quarter, LaPointe mentioned like, hey, we don't have warehouse facilities anymore. You know, and every little thing counts to continue the compounding even further. And so I didn't like the 60 cents. I think it could have been higher. But it is what it is, man. It's just how they operate.
Well, and part of that is too, like if they're in full growth mode, which they are, that does come with a little bit of EPS drag, even as revenue accelerates. So the part of the reason, but yeah, I think that they're being as conservative as normal.
They did mention that they were going to ramp up marketing spend in Q1 26. So I think they're going to be more aggressive in terms of acceleration too.
Yeah. All right. PSUs. They've hit the 25s. If you looked at the share count, that also was a factor in EPS coming in a little bit lighter than we were thinking, Tevis. And I'd forgotten to calculate that in. So, but 35s and 45s, they have to hit a weighted average of 35 or higher over a 90-day period, volume weighted average. So it's not impossible, but what do you think that the odds are right now of them getting, let's just say the 35? Well, you can do both 35 and 45 PSUs.
So they're up when? June, middle of June?
I believe it's
they need 90-day volume weighted average by June 2026. So
right. So, but when in June? June 1st, June 15th, June 30th?
I need to relook.
I think June 1st, but I could be totally wrong with that.
This is why Tanner being here is a miss. Or not being here is a miss. It's like,
so
that nerd, I love
you got
him.
to get to a share price by no later than, say, April 10th or so to average it out if it keeps going higher. But conservatively, you got to get to a share price by the beginning of March at that point and hold it.
And that's why some thought that they would perhaps guide a little bit more aggressively. I just think that
I was one of them
in their blood. So I would have thought that they would have done that also. But like earlier than this, and then the dilution in December is like, nope, they're fully, I think, focused on the future of this company, not short term on like getting their PSUs at all costs. It still would have been nice as shareholders, simply just because you would have seen that reflect in your portfolio. Tevis, what do you think? What are the odds of them getting the 35s and 45s?
Largely, it depends on the macro. It depends on, it's interesting. Tom Lee was on, I think, CNBC today, and he was just like, "Hey, like with Kevin, what's his face, as the new Fed, his expectation is that it's going to look largely like 25, like rocky first half, and then we run in the second half," which doesn't help SoFi. But the point that I'm trying to make is that there's an overarching uncertainty in terms of them being able to hit their targets from a macro perspective, which is somewhat out of their hand. Like they could be executing, and the market just won't care in the short term. I would say just gut 35% for 35s, and then I'd say single digit percentage for 45s.
Yeah, that's about where I am. I'd say maybe 5% on the 45s. And I don't know. I'd say it's probably less than a coin flip now for the 35, just because of where SoFi is sitting right now. We don't know when it'll start rising, and they have to have that volume weighted average. It's a lot to ask for. I hope that they get 35s. It's good for pretty much everybody here. I did see a couple of people speculating that maybe there is some institutions that are long on the company that would rather not see the C-suite get these PSUs. It does dilute the stock. You think there's any credence to that at all? That they're opportunistically shorting, trying to hold down the stock to get it from hitting those levels so that they're not diluted as much?
I don't think it matters, man, because like after this, let's say after the window passes, I'm sure there's going to be another performance proposal thrown to the board. And so I don't know, maybe you're onto something, but I don't think so. The dilution that would be caused would be more than offset by us getting to 45. So if an institution is trying to accumulate and they're trying to keep it depressed, I get that. But if they're like, oh, we want to avoid the dilution, it's like, well, what do you mean? You can literally double up your position, 100% return from here, and management would dilute you a little bit. What do you want to take? I'll take the 100% gain. Absolutely. Dilute me all you want.
Yeah, absolutely. I mean, it's kind of like, we'll talk about Tesla too, maybe towards the end or maybe in the after hours, but same thing. Like if Eli hits his tranches, that's amazing for shareholders because the stock price should be quite a bit higher. So on SoFi, maybe one more thing here, and you guys might have some things to add as well. Were there any other like major takeaways? For me, there's a few, but the one that I think that they're ignoring until they actually announce this, but I think it's very likely that this happens. They mentioned, again, this isn't for the first time, using crypto to actually originate loans. This is, I think, very similar to what Figure has been doing for a while. And we know that SoFi has to be very familiar with what Figure is doing because Mark Cagney was the founder of SoFi. He's now the CEO, not the CEO, the president Figure. They have a different guy, Tannenbaum, that's the CEO. So when they announced this, now a lot of people were skeptical and banks were like, hey, let's be the 10th one using this. So they built this out in-house. And they found that because they're able to cut out the middleman with blockchain, and of course it has instant settlement as well, in essence, they're saving, I think it's something like 130 to 140 basis points over prior originations. Now, this is specific for HELOCs, as well as having 15-minute decision time with those HELOCs, and then they actually pay out. It's in a matter of days rather than several weeks, and it's just because of blockchain. So I don't think it'll be HELOCs that SoFi does this for, but probably personal loans initially. But there is, because they have their own stable coin, they're vertically integrated with this, that once they launch this, that not only does it help fuel their lending side because they'll have higher margin. And Noto, by the way, mentioned that some of that would be passed on to consumers as well, so that it makes their rates even more appealing. But beyond that, they can do this on the loan platform business side as well. And that chart that we looked at, that's our favorite chart there on the originations and that spread, what they actually make, that's going to look even better when they do this as well. And I don't think the market has even picked up on this. So am I crazy? Is it just too far out there? Or like, yeah, we kind of need an announcement to see when it's coming and what it'll look like. What do you guys think? And does that make even any sense? Because maybe you're like, hey, that's confusing.
Go ahead, Steve.
Well, I'm a little preoccupied at the moment because we have a pizza catastrophe that happened. A pizza catastrophe. Somebody went to John's on Bleecker, and we'll be having a talk on Sunday, whoever you are. And they're judging it on some pie called the Sasso. That's just not okay. It's not okay.
I'm having a stroke. What the fuck are you talking about?
It's not okay. Exactly. I'm having a stroke. At least they had chocolate milk in the picture. But seriously, you're going to judge John's on Bleecker on the Sasso? I would have bought you the regular on top to judge it on. Blasphemy.
Okay. I have no idea what you're talking about, but all right. So Tevis, back on topic.
What was the question again? Sorry. The pizza and chocolate milk.
Essentially, I think Noto has tipped his hand a couple of times, and I think this is further confirmation that they're going to use their own blockchain, SoFi USD, to be able to actually originate their loans. And we've seen the playbook from Figure. I think they're going to borrow that. No reason not to. They're already aware of what they do, but use it for personal loans, which, we don't know. Fair enough, like for the market, like you don't know. You can't just assume that because HELOCs say doing this for HELOCs, say Figure, like let's say 130 basis points, you can't just say automatically it's going to do this for SoFi, but it's pretty clear that this is accretive. Noto has talked about this as well. Do you think that this is a reality, that they're going to shift most, if not all of their lending volume onto the blockchain for that purpose, or
maybe
it doesn't really matter?
Maybe. Let me throw something up on screen, Stephen.
Yes, sir.
So this was the quote that Anthony Noto had around M&A, and I think it's worth sort of revisiting, Roy, to answer your question around where do they want to spend their resources. So saying bar's really high, looked at dozens and dozens of things which were for sale, to transport fiat power from the US to fiat dollars in over 30 countries internationally. There's a way for us to accelerate SOFI's pay international expansion through tech platform or a type of acquisition. We're also very interested in international countries and licenses that small companies could have. Tech platform, we could have revolving credit card processing and issuing. If that's something we can build ourselves, but there's a technology that's not that expensive and we don't have to pay for that business, we may do that and leverage our technology platform. So a lot of it is in the tech platform. And he talked about big business banking, saying, we've looked at some SMB platforms if they would accelerate our opportunity there. But he said later on that they want to build big business in-house, saying, continuing on to, I think, a little bit of what you're talking about, Roy, and basically saying we have optionality to do what we want to do. But this was really interesting, him going a little bit more in depth around where an acquisition would be accretive to the roadmap. And it seems as though a lot of it is focused on the tech platform specifically, and small deals that are priced just right that can help them get some competitive advantage. So like licenses for small companies, for example, is an interesting thing there. Now, I'm not sure how that might work for an acquisition in the crypto space to further entrench them. They were talking here about some new products in crypto, saying we're going to look to do secured lending by crypto, settlement via stablecoins, build an offering that includes institutional crypto trading, makes us the first nationally licensed bank to offer this service, stablecoin as a service, crypto card issuing, digital asset cuts and infrastructure services, and the ability to interchange fiat and digital assets in real time through their exchange network, as well as the ability to settle transactions 24/7 on a virtual ledger. So further entrenching in cryptocurrency. Now, I don't know how much of that is going to be built in-house versus how much of that is going to be on an acquisition, but yeah, TBD. I know that doesn't answer your question. It's more like opening more questions than answers, but I think they're really looking across the board for where an acquisition could help.
Yeah, that level of detail was actually really surprising, at least to me. I like it as a shareholder. I like to hear kind of what they're thinking, what they're looking at, and what a potential acquisition would look like. Yeah.
But what type of acquisition could they be going after?
I don't know. I mean, like big business, international licenses. We speculated before the earnings, so we didn't see this before, that if they did an acquisition, maybe it would be along the brokerage or crypto side. So eToro, possibly public. But I don't know. It doesn't really sound like that from the earnings. Any guesses from you guys?
Yeah. So initially we were talking a lot about consumer products, but it sounds like they're just going to be looking for infrastructure plays more than consumer products.
Yeah,
that's how.
And like the licenses that they could have in an acquisition, like this was the way that they actually got their banking charter. Golden Pacific, initially they acquired them for that national banking charter.
Yeah, that's fair. And they got Golden Pacific fairly cheap, all things considered, right? So
yeah,
I think it's very possible. Like if they want to expand somewhere internationally, well, they can run the same playbook with Golden Pacific and they can get some momentum going on that front. So we'll have to wait and see.
Yeah, absolutely. Did you have any other takeaways from SoFi's earnings, Steve?
I did not listen to the earnings call. Today was a extremely busy day.
Yeah, happens.
I will be doing all my due diligence at some point over the weekend and putting an article out early next week. From going through the deck and going through the press release, I actually haven't seen any of Noto's interviews. So I want to watch the one from Yahoo Finance, CNBC, and get my thoughts together. But just at a glance, I like everything I'm seeing. I think our EPS is sandbagged, and I think the market is pigeonholing them as a traditional bank, regardless of the growth. Nothing else is explaining why it's down. I mean, we can't just say, "Oh, it's a down day for the market," because it was over 30. Like, this has been a sell-off into earnings, and it sold off after phenomenal earnings, and it could continue to sell off regardless. We all think it's going to be higher. All of us had, I believe, $40 to $55 for a price target by the end of the year. So we're all super bullish on the company. The problem is the market's perception of it. And I don't know at this point what it's going to take for the market to change its mind. Maybe we get some love if SoFi gets into the S&P next quarter. I think that there's a good chance at some point in 2026, considering the S&P loves financials, that'll definitely help. It should give it a little bit of more authority in the market. I just don't know what they can do at this point. And
I mean, you got to keep in mind, Steve, that like this thing was flat for a long, long time, and then in a matter of like 4 weeks, 5 weeks, they doubled. Like they did 100% year on year, and so the profile of the stock is that it'll do a parabolic move when it's good and ready, and it'll build a big base otherwise. So that's not for everybody, but I do think that the narrative can change quickly, and we saw that when we went from $11 up to $20.
The narrative can change. Unfortunately, the base that was established was shattered today.
Yeah. Structurally, the stock, if you're looking at TA, it doesn't look pretty. Long term, since I'm an investor, I don't mind. But yeah, that's definitely a factor. There are traders in the stock for sure.
Tevis, I'm bringing up my TA. You ready? I know you love my TA, Tevis. The base is shattered. You see that? I'll even give you a little line. The base is shattered. Look at that.
The support and the resistance is at $20.
No. The base that was formed was right around here. Right there. So that's my TA. I'm sticking to it. We need something to happen.
Yeah, there's a lot. It's not just SoFi too that's in this kind of position as well. When do you think that this reverses? The market has been weak outside of a few names and few spaces for a little bit. You think that this may persist, if you had to guess, weeks, months, all year long?
The S&P is still at 69.39. We're still at highs. That's the thing.
Yeah.
Do we feel like there's some huge sell-off going on? There really isn't.
In tech, there is.
But once again, tech's not the whole market. There really is not a big sell-off happening. The market's still at all-time highs. So I don't know.
Yeah. S&P has a lot more it can give up. NASDAQ was hit a lot more as well. Software got just pummeled yesterday, especially. Also today, it's been in a free fall for a lot. Well, we talked about it last week. I don't want to rehash that. I think that this can persist for a quarter or two at longest. Like, it's hard for me to see anything structurally. I think it'll actually be a lot shorter than that, just because it's so hard to pinpoint. Okay, why is this happening? What's the narrative? It may just be as simple as profit taking, a little bit uncertainty with some of the macro stuff that's happened. It's not, sometimes there's a flight to safety. It's not the strangest thing. We're seeing, that rotation that's happening from crypto as well. That's an indicator that could reverse in a hurry. But for myself, I'm not getting any downside protection. I'll ride this out. It's not fun to see this much red in my portfolio. And I am down now year to date. I was enjoying. We had that nice pop very early January, and it's been grinding down ever since then. A couple of names that held me up, and then today with SoFi dumping. Yeah. Tevis, what do you think about the current action in the stock market, the weakness that we've seen, especially in tech and software? Do you see a reversal happening soon, later? What do you think it'll take?
Yeah, I don't know, man. It's a lot of the market is really skittish, I guess, on software specifically, on AI specifically to that. So we need some stabilization. I think I need Trump to lay off Twitter for a while, because I think that's not helping things. And then, look, what I was saying with Steve yesterday is that the reassuring fact here is that all the mega caps are actually beating by a good, healthy clip. I'm very bullish on Amazon next week. I think they're going to beat and they're going to get re-rated by the market. Similar to how, Meta immediately just popped to like 735 or whatever. But we'll see. Like, I think this Fed news was not great news. It's great that the shutdown is resolved or will be resolved as of Monday. It's going to take a little while. I still think the trade is intact, even though structurally, from a technical perspective, so many charts are just broken. But overall, I do think that earnings will tell a story that the strength is still there from a demand perspective, and the capex is not slowing down, but in fact speeding up. That's what Meta and Microsoft were showing. I think Amazon is going to show something similar, and it's going to take a little bit of time. It's a blip. That's how I'm treating it, at least.
Yeah, that's fair. Yeah, like long-term horizon, it's easier for us to do this. If somebody is needing short-term money and they're a trader, it can be really hard. It can also be frustrating when you're like, man, these are attractive prices. I'd love to buy the dip, but you don't. You just don't have that. That happens. Yeah. All right. Anything else you guys want to hit and cover before we move to after hours?
Yes. One more thing with SoFi. Noto did say 30% year-over-year revenue growth through 28, correct?
Yes.
Okay.
Yeah, and we got clarification, by the way, when you read that, it says 2025 through 2028, compound annual growth rate, 30% revenue, 36%, something like that for EPS as well. It's not including 2025 in those numbers, so they are, as strong as they look at first glance. Just saying from 2025 on. It's a little bit weird way to put it, but Chris clarified that for us.
So it's not on an annualized basis. It's just straight.
It is. What I'm saying is they put the range there in their earnings of 2025 through 2028 from 2020. And so like there was a question of like, wait a minute, are they including the already strong 2025 numbers? In which case that guidance is not as strong as it looks like on the surface. The answer is no. It is just as strong as it looks like on the surface.
So it's a compound annual growth rate of 30% for revenue year over year through 2028.
And higher than that for EPS, yes.
Okay. So, and here's what's interesting. The street is only factoring in 29.18% this year, 16.26% next year, and 4.15% for 2028. So the street has them completely wrong if Noto's correct. So that could be a huge catalyst going forward. Huge.
Yeah, I feel like at this valuation especially, there's a lot that the street is overlooking on SoFi, which,
it's always been the case. Not enough big analysts are covering this stock. Yeah. That's one of the big problems. It just doesn't get talked about enough. There's not a big enough community of analysts following it. Unfortunately, it's just not something people are interested in.
Yeah, that's fair. All right, so I guess we'll go ahead and move to after hours. This, if you guys haven't been with us before, basically, it is members only. We're going to do this live. It usually takes us a few minutes for us to set up. There's a number of topics that we might talk about. There might be some others as well. It's usually more of a grab bag type of thing. We've not mentioned Tesla earnings and then the SpaceX stuff. I for sure want to hit that with you guys in the after hours and get your thoughts, especially you, Steve, Tevis. We've kind of talked about some of this stuff before, but I hadn't had your take yet from this. There was some wild stuff in Tesla earnings. ASML gave us a really interesting read as well on the AI race and what's happening there. I don't know that we want to necessarily touch that. And there's a few other topics out there too, like OpenAI stuff. Nubank getting their national banking license. I don't think you guys care too much about that, but in like record time, coming to the United States, and other topics as well. We could talk some Nebius, and I'd love to do that actually, Tevis. There's a little bit of news this week, and yet Nebius is tanking, which I might have to pull the trigger soon.
Yeah, you really do.
We'll leave it there, guys. Thank you for watching and joining us tonight on this fine Friday night. As always, you guys make this possible, and it's a lot more fun with you guys here. So if you're a member already, any of our channels, you can have live access, or it'll also be recorded as well if you prefer. And we'll have that up here in just a few minutes. But thank you guys for tuning in, and we'll see you next Friday.
All right, everyone. You guys, the link is in the private. Thank you, everyone. I'm ending this stream. We'll be on the members only in a few minutes. Looking forward to seeing everybody there. And for those of you coming to the meetup, we will miss Roy, but we will see everybody on Sunday. Looking forward to it. See everybody next week.